Okay, we are right at the top of the hour here. So I think that we are going to get going and started. Thanks for joining us today for our session on the COVID impact on commercial real estate, your workplace strategy, and company culture. We have with us today, we're super lucky. We have Frank Racine with us, who is the Executive Managing Director in their brokerage services division of JLL. And as with many things that we do here at the Mortgage Collaborative, Frank was introduced to us by one of our really good lender member companies who have been with us for a while, Annie Mac Home Mortgage. With the thoughts that after many of the conversations that we had on our collab labs in November and December, that many people were talking about commercial real estate and what they were going to do with it. We're going to start off here by doing a little poll at the beginning. And so, Amy, if you want to launch that, that would be great. And we'll give you just a few minutes to submit your feedback. And then we will pull it back up and kind of share our results with everyone.
Everybody sees it okay?
I can on my side.
Yes, Amy, we can see it.
Cool.
And so while we're doing that, we'll give that just a couple of minutes. Frank, you want to do just kind of a little brief introduction of yourself and what you do daily with JLL?
Sure. So Faith and Amy, thanks for having me here today. Appreciate it. And as Faith mentioned, Annie Mac, I've been working with them for probably 17 years now, helped them with their first office, and we've opened up hundreds of offices over the years throughout the country. So to give you a little bit of background on myself, and it'll be helpful for you to understand kind of what I do on a day-to-day, so you can see from a perspective of how I'm viewing things and seeing things. My background is I'm an attorney. After going to law school, I jumped straight into commercial brokerage. I passed the bar, and this is 18 years ago, and gave my parents a heart attack by telling them I'm going to take a commission-based business in the commercial brokerage field, which, commercial real estate and mortgage is very similar, service-based business. And at the end of the day, the company creates revenues by transacting. So it's a very similar service line as the mortgage industry. I'm with a company called Jones Lang LaSalle. We joined them about 3 years ago. I have a team I started about 16 years ago. And my team came over to JLL to run the state of New Jersey. And JLL is a large global real estate firm, about 88,000 employees. And although I'm housed out of New York and New Jersey, I bounce between Manhattan and New Jersey. Most of my work, about 80% of it, is multi-market, so it's throughout the country. So I see a lot of these decisions from a large global perspective, and companies are making decisions. And then on the flip side of that, I get to see it from a smaller company perspective. I own a commercial construction company with about 20 employees. So a lot of you that have smaller mortgage firms that went through the PPP and the uncertainty early on, I went through it firsthand with my partners in the construction company. So I have a unique experience because I'm seeing it from all sides. Before I jump into the discussion, what I want to do today is I'll give you a little bit of the scope of what I'm seeing in the market, and then toward the end I'll open it up to questions. The reason I wanted the poll early on was I just wanted to understand where everyone fell within the spectrum of the size of your company and kind of what's important within the company, so I can tailor the conversation. So Faith, did the answers come back?
We do have, we do have, last call, if you haven't completed the poll, go ahead and do so. We do have some TMC folks on here too, so I imagine they're not answering. So I can go ahead and end the polling. We've got a good cross section here, looks like. There's your results.
So.
Okay, so about 50% of the companies are 100 plus as far as employee base. Pre-COVID percentage that were working from home. Okay, it's interesting because it's higher from the work from home. It's actually higher than most industries. On the post-COVID, when people start bringing employees back, a higher percentage is saying that they're going to allow flexibility, which is nice. And on the work-life balance, I think you're all saying the right thing. You know, number 4 and 5 is on the higher side of importance of you know, taking your employees into consideration when making decisions. So that's great. All right, so let me start before we jump into it. I want to start take us back to March 5th, and I think we all have our own little stories, but around mid-March, JLL has its global conference where it takes the top 5% of the brokers throughout the country out of the 88,000. And one year it's on the West Coast, one year it's on the East Coast. This year it happened to be on the West Coast. That was the week of March 11th. So the week of March 5th, we decided in New Jersey to grab the small group that was going to go to the West Coast next week and host a dinner at Fiorino's just to kind of get together as a thank you for what they had done the previous year. And we were sitting in I don't know if anyone's been there in Summit at Fiorino's. It's a restaurant, low ceilings, really cool vibe. It's almost like a wine cellar. And we're all sitting shoulder to shoulder and talking about this thing called COVID that everyone overseas. It seems to be a pandemic going on overseas, and what's going to happen in New York and New Jersey. Meanwhile, we're literally sitting shoulder to shoulder in this basement, and we're talking about the election and the same thing everyone else, on this call is probably talking about. That was on Thursday. We all went home. That following Monday, we had scheduled a round of golf for about 10 people that were going to leave for the West Coast 2 days later, the next week. And that weekend, I got a call from my partner, Tim, who runs the operations for New Jersey. And he said, look, I'm getting a little nervous. Over the weekend, I've been watching the news and I'm hearing more and we're seeing more cases pop up. As a public company, maybe we should cancel this golf outing and we'll readdress it when we get back 2 weeks from now from the West Coast. Great. 2 days later, we get a message from our global CEO that they're stopping all global travel. They're canceling the conference, and everyone just kind of sit tight and we'll address. And the one credit I'll give to JLL, they're a very vocal company and they do put the employees first. So there's a tremendous amount of communication. So it's pretty shocking to me that this happened within a 2-day period. And that's really just shows you how fast everything was changing. A week later, we got a call, global mandate, do not come back to the office until further notice. We're a commercial real estate company, and this is where where our lifeblood is being in the office, and some of it's sales, but it's mainly on the leasing side of the business. So everything came to a complete and utter halt. So I'm sure many of you have your own story. We've all been there. We've all seen it. So what did I see for the next month and a half? A lot of turmoil is really what we saw. We saw companies for the first time not really understanding what to do. Most companies, unlike in this poll where you see a lot of people who are working from home, a lot of companies didn't have the work from home. I'll give you an example. I had this one company, an apparel company I worked with 200 employees. Their motto was, if you're not at the office, you take a personal day. That was it. It was just kind of the way they operated. And all of a sudden, within a weekend, they had to pivot and bring their entire workforce to the house. So, that creates its own complications from cybersecurity and people just not having the resources to work from home, the printers and the kids running in the background. And let's add to schools. We didn't know whether our kids were going to be in school the next day or they're going to be homeschooled, and teachers are trying to figure out how to do Zoom. So business came to a grinding halt because people were just trying to figure out their lives. From a small business perspective, people, they started to shortly thereafter started talking about PPP and what was the PPP, is it forgivable? How do I apply? So it almost came from the office perspective. Everything came to a halt. And this is before mortgages took off. I know everyone's at a high right now in the mortgage industry, but there was a period of time where you couldn't even show houses. And I know this because I was selling my house because I was moving into a new home, and the governor made an announcement that they were shutting down in New Jersey. You were no longer allowed to show houses. And 24 hours before the ban came, I got a cash offer of my house, and I got really lucky, and I closed and moved on immediately. But a lot of my broker friends on the residential side were stuck. They didn't know what was going on. again, technology was the biggest issue I think that I saw from companies, and trying to figure out how do we keep people engaged? How do we keep our employees active? There's human and health resource issues of people with depression and just issues they're dealing with at home, and a whole host of issues that my port partner, Tim, who literally was handed the reins to run operations on March 1st, stepped into this, managing this issue for a couple of thousand people. So, there's three segments of real estate I just want to just touch up on for a second. There's the office section, which is what we're talking about today. There's the industrial markets, which the industrial markets are hotter than I've ever seen them in the 20 years I've been doing this. If you drive down your street on any recycling day and you look at the amount of boxes, the Amazon boxes that are sitting on your curb, and our whole trend of buying has changed. You want to buy a pen, you buy it online nowadays. You don't go to the store anymore. So what that leads to is the last mile, the run for the last mile, and industrial buildings trying to get closer to the masses. So the industrial markets are healthy, they're fine. They're actually, there's an undersupply of industrial products. You have the retail segment, which is hurting really bad because it's starting to reinvent itself. The e-commerce has really destroyed retail from a large block standpoint. From a smaller retail standpoint, the mom and pops, the local diners, they're trying to figure it out. And unfortunately, financially, most of them are just getting by, and they're just keeping their employees employed, and they're not really making money. So hopefully, if this drags on a lot longer, I think there's going to be a bigger issue on the smaller retail side. But we always do need the smaller mom and pops within the local communities. And I think they're the ones that are hurting the most right now, unfortunately. I'm going to stick to office because that's kind of where my expertise is, and that's kind of where the topic of subject goes. Trends during COVID. So talk a little bit about trends. So we talked about the working from home, the technology, the cybersecurity. I can't tell you how many of my clients were having issues with hacking and company and ransomware. And so there's a whole industry that we're all aware of, which is the ransomware companies, the cybersecurity companies, which I'm sure you've had, speak to the organization. If you haven't, it's something you may want to look into. It is really interesting. But there's a whole host of negative stuff going on out there where, your employees are now working either from their home, they're working from their home computer, kids may get on their computer, and next thing you know, someone has been able to get into their individual computer and is now accessing the work computer, and which is creating a disruption in the traditional work environment. One of the things that we started to notice as we're starting to slowly come out of I'll call it the post-COVID, because we're not out of COVID now, but what people are looking at, they're starting to say, what am I going to look like when I do go back to the office? If I had 100 employees in desks, and the trend went from everyone being in offices, and slowly over the past couple of years, it became more of a cubicle layout, more densification, bench style seating, especially in the mortgage industry. Well, instead of having in a small area, having 2 or 3 people work, now we can have 6 or 7 people work, and then we'll create these cool little breakout areas where there's a pool table where they can have a little bit of downtime, but in their workspace, it's going to be pretty tight and dense. People are now stepping back and saying, that's not going to work. Whether it's COVID or whether it's something else down the road, we need to keep our employees healthy, and we need to keep them feeling comfortable coming back to the office. So the conversation, even on the smaller scale and smaller companies, is actually leading into the conversation that larger companies have been talking about for a while, which is workplace strategy. What do I need to look like? What do I want to look like from a workforce standpoint? And the real focus behind it, I'll tell you what a real estate director and a corporate executive are looking at. They want to say it's to keep the employees happy and healthy, but the reality is 2 things. One is the cost savings, right? It's a cost saving from a real estate perspective. And the second is the cost savings from an employee perspective, which is your largest cost as a company. If you can bring on good talent and you can retain good talent, at the end of the day, you're going to be a better running company. So at the end of the day, when they start to take a look at what's important to their employees, what's important is the work environment and having a flexible work environment. So that's really where a lot of the large consulting companies such as JLL, as they're doing these strategy tests for large corporations, and they're looking at it, where the conversation is shifting, is really shifting toward what's a better environment for the client? The client being the employee? How do we bring on the new talent coming forward, and how do we retain the existing talent? I read a study somewhere, and they were comparing the cost of employees versus people arguing over 50 cents or $1 a square foot in rent. And at the end of the day, I think the cost to replace a new employee was something like $30 a square foot, whereas people get caught in the weeds of arguing over 50 cents a square foot in a real estate transaction. That 50 cents, $1, or $2 a square foot can be the difference in moving into a better quality building with a better work environment for your employee. And that's where I'm seeing the trend going right now. You're seeing buildings that are more amenitized, and the amenities may not be in the buildings. They may just be in the surrounding area. I just came from a showing this morning in New Jersey, and it's called North Market. And this developer, he started doing this about 6 or 7 years ago because he was ahead of the trend. What he started doing was buying large obsolete office buildings, and we're talking 20, 30, 40, 100 acres, and basically creating an urban market within a suburban area. So you took a suburban market, which traditionally homes and large corporate headquarters, that the buildings weren't doing well, tears the buildings down, and what he does is he builds almost a corporate center with residential around it, 250, 300 residential homes, and they curate it with really cool retail, something that's going to fit within the compilation of what they're building there. And what's interesting, those buildings, as we're starting to come out of it, those are the ones we're seeing the most activity. And the rents are significantly higher. We're talking almost a 30, 40% delta on rents. But the people are willing, the employees are willing to pay for it, because what's happening is you have buildings with 13 feet of glass, more natural light coming in, better HVAC systems, which that's what people are asking about now. What are the filtration systems, the UV lighting, and the type of cartridges you're using? These newer, more modern buildings have that. Forget about the cafeteria in your building where you're eating the same stale chicken sandwich, every single day. I'd rather be in a building where I can walk downstairs and there's Jersey Mike's, there's a Starbucks, I can grab a coffee. I can walk downstairs in the lobby, there's Wi-Fi, and I don't have to sit at my desk all day long. And we can work. We can have impromptu meetings in the courtyard outside. So that's really where the message is going, and where I think real estate is going from an office perspective. Even on the large side, some of the larger transactions that we're seeing right now, in the beginning, we thought there was going to be a big push out of the urban markets like Manhattan. And, New York is having its issues now. On top of COVID, it's going through some unease politically and just things that are going on within the city. What I'm not seeing is that run or flight out of New York that I thought I would have seen. I am seeing a handful, maybe 10, 15, 20%, which is considering, we're just going to downsize and close those facilities completely, or keep maybe a 20% footprint over time. And then what we'll do is we're going to try to figure out, what do we do with the rest of the back office? Do we create a hybrid model? Do we bring some into New Jersey, move them out of the state completely? Do we move them to Florida? For tax purposes, it's cheaper. Do we move to Texas? And give people the ability to work from home, and let's study the different disciplines within the organization and see, do they really need to be in the office? And if so, is it twice a week? Do we create more of a mobile hub where when they come in, they come in on Monday, Tuesday, Wednesday, and the next group will come in Thursday and Friday, and between Wednesday and Thursday, we'll make sure the entire office is disinfected, so you're not sharing desks every other day. What I will say is there's no right answer. I've talked to 50 different architects, and I talk to architects every day and all the requirements we're working on, and not one of them has an answer. And if they can come up with the answer, they're gonna be a billionaire. They don't. They're all saying the same thing, which is, spread people out, less densification, but no one has the answer as to who's really coming back. And I think that's one of the reasons you're seeing the trend right now. In my world, on the office side, industrial side, as I said, was probably up 200%. The office side, between COVID and now, is probably down 70%. It's a big number when you look at revenues of a multi-billion-dollar company. So that service portion of it, which is a large portion, to be down 70%. And and I keep asking myself every day why. And as I talk to people, I try to figure out what it is. And the only conclusion I can come to is it's a psychological reason that since people are not in the office, they don't want to make a decision based on signing a new lease or moving into a new space, because no one wants to be that decision maker to say, I'm going to take 100,000 square feet. And by the time they move in, they realize that less people are going to come into the office. They only needed 70,000 square feet. So everyone is paralyzed because they don't want to take too much, but that's causing a little bit of an issue because the proactive tenants that I'm working with that are looking at this are taking advantage of probably the worst market I've ever seen in the 20 years that I've been doing this. And I'm seeing things, it's a different scale on big deals and small deals. But I'm working on some large deals where we're getting 14, 15 months of free rent and the landlord's giving us cash to rebuild space where the landlord's not going to see a profit for 5, 6, 7 years. They're basically just buying the tenant to get them into the space. I've never seen that in my career, and it's going to change at some point. And I'll explain why I think it'll change in a minute. But I think the tenants that are being proactive right now and thinking through this, you may make a 10% or 20% mistake in the size of the space, but at the end of the day, that's I want to say it's almost irrelevant. It's irrelevant because if you're going to make a 10% or 15% delta over time, it's gonna come back to you anyway with more employees. You can spread out the space a little bit more. But what is going to happen is you're going to see a pent up demand over the past, I would say, leases that were rolling in 2021 that are now pushed off for short-term extensions. 2020. The leases that are rolling in 2021, and for mid-sized deals, we're focusing on leases that are rolling in 2022 and 2023. All of that's going to hit the market at the same time. And the issue you're going to find is if the theory that workplace strategy and the quality of your asset really is what's driving the decisions, and that's what we're seeing right now. If you look at the compilation of the office product throughout the states, and I'll just use Jersey by example, most of the product was built in the early 80s. It's obsolete, it's older. So 10% of the product is Class A product. And when I say Class A, it has amenities, it has maybe security in the building, it has covered parking, better quality of air coming through the HVAC systems. There's a small grouping of those assets when you bury them into the remainder of the asset classes. And if everyone is now competing over those assets, what's going to happen is you're going to see that market dry up very quickly. It already has. I think the landlords are smart and they realize this, because if you look at the B and C quality markets, there's not a lot of deals going on, but the ones that are floating out there, the landlords, there's a pretty significant delta in the rents, meaning starting to go down. On the Class A, I haven't seen it go down at all. I've actually seen it remain steady. And some of the conversations I've been having with people when I'm on the landlord side is we're going to start to raise rates as we come out of this. Maybe we'll give a little bit more free rent to give tenant some time to breathe and to get into the space and to phase people in. But we're not going to want to reduce rents. And psychologically, it all ties back to your industry. Right? Real estate is really nothing but finance and numbers. So at the end of the day, we, as a landlord, if I'm representing a landlord, I want the highest face rents possible so I can then either refinance the building or I can sell the building. So these Class A quality landlords that are stepping in now, and you're seeing a lot of them spending their time and energy now while there's downtime, going and renovating the buildings, renovating the lobbies, the common areas, and trying to monetize these buildings. If you're not taking advantage now and you're not having the dialogue now, if you're having it in 6 months from now, unfortunately, I think you're going to be a little late to the game, and you're going to see some of those concessions packages dry up. If you don't care and you want to be a B or C class office building and you have people just kind of touching base, it's a different discussion altogether, because there's going to be a lot of that product in the market and you're going to be able to write your own ticket. But I think the issue is going to be, the employees and what the employees are seeing as they're coming back to the office. Because don't forget, there's a lot of people that although it's uncomfortable working from home, they've gotten comfortable working from home. And they don't want to come back full time because they want to be able to, run their chores in the middle of the day and when soccer starts back up, run to Johnny's soccer game if they can slip out for a little while. I think if you're in a company like in an industry like the mortgage industry, where you can actually benchmark and benchmark what people are doing, then it's not as big of a deal. And the flexibility, I think, even being an individual who makes money in people leasing more space, what I'll say is your mindset's going to have to shift, and you're going to have to, especially with your key employees, figure out a way to accommodate and work with them in a manner that they can work from home or work from the office on occasion. Because what's going to happen is, for $10,000 less in salary, they're going to go work for a competitor that's going to give them that flexibility. People have tasted that the ability to have some freedom and flexibility, and unfortunately, I think it's going to be tough for us to unravel that. What I'd like to do is, if everyone's good with it, open it up to questions, because I want to make sure I'm kind of guiding in the right direction as to what's important to everyone here. And I can go on for 2 hours on this topic, but we're going to end back at the same spot, which is be flexible. And at the end of the day, the workforce is changing, and there's going to be a lot more working from home.
Time for any of you that are on to ask any questions that you may have. I have one, so I'll start off from the top of it to get things going. In hearing you talk, my thought process was one of you almost have to look at your office space maybe more as an employee benefit, or more as a retention strategy to keep people going forward, versus it just being office space, right?
Correct.
Is that something that you're seeing people kind of take advantage of now when their lease is up, and doing that move from maybe a B space to an A space because of that thought process?
That's exactly where the trend is going. And it started from a larger corporate perspective. This started 5-6 years ago. You're starting to see, well, let me take a step back. So it was interesting. From a real estate perspective, you would always have the executive, maybe the real estate director, and the CFO would get involved in the transaction at some point, because most of our transactions are anywhere from 6 months to 12 months to negotiate these leases. Over the past 5 to 6 years, one of the most important people in that room was the human resource individual. And they were, all of a sudden, they started to get brought on early on in the process of touring buildings. In their input, I started to notice that the dynamic was changing, and who really had more power as they were making decisions. And obviously, as the salesperson, you're focused toward the person who's kind of guiding the decision.
Sure.
And it was exactly that reason. Smart companies realized that there was a battle for the good employees and the right employees, and the cost to replace those employees once they came on was significant. So we wanted to retain those employees, and the real estate became really an extension of a benefit to an employee, to show them, look, this is where we're working. It's a great environment. We're a very pro-employee company. From a business, from a perspective of your office, if you have to run out for lunch, it doesn't take you 20 minutes just to get to the local diner. You're 2 minutes away from it. You can actually walk there. We have walking parts. You see a lot of buildings that are building walking paths through through the woods, or they're putting, like you see in Manhattan, the bike stations, where they're letting people just for free take out bicycles and ride during their lunch breaks. So they're really just trying to create a place where we want to keep the employees as close to the office as possible, let them get out a little bit, let them clear their head, but let's keep them there versus losing them for an hour to go off for lunch every single day, and losing 2 hours of productivity. By the time they leave, come back, they're talking, smoke breaks downstairs. Let's try to keep them productive.
Sure. Other questions? I know that you're not all shy all the time. So, if you can pipe in, I think too, we were talking earlier, and there was a question that one of our team members had. Frank was not going to answer until we were on the call for everyone to hear. So Ash, you want to go ahead?
Sure. So I just listening to our lender members talk, and obviously just hearing folks talk yesterday on the podcast that Rich did. One of the real challenges to our industry is the shortage of residential properties, or affordable lending. And I'm wondering if there will be a trend as commercial real estate frees up, if we'll see any movement of that, that real estate moving into residential.
Yes, yeah, well, that's exactly what we're seeing. So some of these older office buildings that maybe can't handle the parking, the HVAC is older, they don't have amenities, and rather than go in and create more vacancy within a market, and let me take a step. One of the biggest issues with real estate, most people don't understand, is the profit side of it is not big for landlords. Because if you look at the cost of acquisition to buy property in most states, how much it costs to actually build a building, how much it costs to fit out a tenant space. And then if they sign a 10-year lease, they're not seeing a profit for the first 5 years. At year 7, the tenant is coming back to them saying, I'm going to leave unless you give me X. Or the tenant picks up and leaves and you start all over again. So developers have stepped back over the past couple of years and said, why am I in this rat race? Why am I doing this? So what you're seeing is a lot of these older buildings, if the land permits and the use permits, is they're redeveloping for industrial for that last mile to try to get the product closer to people, and residential. And you're starting to see it. I'm working on a project right now in Wayne, New Jersey, the former Toys R Us headquarters. It's all nostalgic for all of us. Jeffrey, there's actually a big picture of Jeffrey still on the wall as I go through the building. It's a 640,000 square foot office building with 200 acres that sits on a reservoir. And it was absolutely beautiful in the 80s. Like in the 80s, it was one of the cool, it almost you felt like you were at a resort. In 2021, who wants to drive 25 minutes just to get to, once you get off the main road, just to get to the office building, to be stuck in the middle of nowhere? And if you have to go out and get a stamp or drop a letter off in the middle of the day, it's gonna take you 20 minutes to get out of there. So a developer stepped in, my client stepped in, purchased it. And what we're doing is we're building an ecosystem around the office building now. So the office building is going to stay, but we're trying to get rezoned for, let's just say, another 1,000 residential units surrounding it. And then after the residential units come in, we're going to build a retail around the residential, which will then feed into the office because you have that live, work, play environment. So I think that is exactly what you are going to see. And you're going to see it on a large scale also, because some of these large corporate campuses, where you had 1 million square foot office campus at the so at the end of the day, they're obsolete, and I think some of the more entrepreneurial developers right now are thinking exactly the way you're thinking, and getting out of the office game and more into the residential and industrial game.
One of the things that I've been thinking about as you're talking is, in our industry, people have talked about the fact that now they can sort of go outside of their local area for talent. It sort of opens it up nationwide. So that doesn't fare well for trying to keep people coming into the office if you're now looking at your, your employment pool on more of a national or global level.
Yeah. So yes, and I'll give you a quick story. So my wife's sister, 2 kids, and brother-in-law they live in Florida, and they've been up north with us. They're going back on Friday. They've been up north with us for 6 months through COVID. 6. I mean, they're great, but 6 months.
Right. I love it.
my brother-in-law runs IT for a rather large company. He's doing it out of the basement of my house for the past 6 months. Pretty amazing. All global company doing it out of the basement. And before that, he was in the office every single day.
Yeah.
And since he's been here, he's been meeting friends of mine, clients of mine that have come to the house, and just getting together. And I've gotten calls from 2 of my clients that are looking for 2 new heads to run their IT for their company. That they're mid-sized companies trying to scale up. They've met my brother-in-law over the time. And they're trying to beg me to get him to interview with them. And both of them, I said, but your folks were local. Like, he doesn't live here. He lives in Florida. He's not going to pick up and move to New Jersey. And one of this was that company I mentioned earlier that, if you weren't in the office, you take a personal day. Their whole philosophy's changed. They said, he doesn't need to be here. I don't care where he is. As long as I can get him on a Zoom call. And they realize at the end of the day, you don't need to be at a desk. People are as productive as being in the office if you find the right employee. There's clearly you have to find the right employee. So I think that's exactly where this is going to go. I think there's still going to need to be a touch-based location from a salesperson perspective. That's a large portion of what I do. I'm transacting, but you're bringing in the business. Anytime that I go back into the office, and there's people there, we always come up with more ideas and create opportunities for the company. There's no doubt in my mind. The more that I think that I'm working from home and I'm productive and this is easy, it's great. Every single time I've gone back to the office, I've come out with 2 or 3 other opportunities that I just wouldn't have been able to do sitting in my home office as productive as I'm being. So there is that need. It's just trying to figure out how to balance that need going forward.
Yeah.
Yep, we do have one question in, Frank, that came into the chat box, and that is, what trends are you seeing within some of the smaller to mid-sized cities?
I think every little city has its own DNA, right? So some of the cities, especially in the Midwest, are acting as if nothing's going on. It's really interesting. I'll talk in certain markets and I'll have people say this COVID thing is made up and they're just operating as business as usual. And then I'll talk to someone else in another small city and they're wiping the microphone on their computer before they speak to me because they're so paranoid about what's going on. And I don't use the word paranoid loosely. It's just what we're dealing with in today's society. So unfortunately, there's no easy answer to it. It really it fluctuates. What I will say though is across the board, I think on the office side, there's been a pause, even in the cities where it's business as usual. People are stepping back a little bit and they're taking a look and saying, all right, maybe we should do what other people are doing as far as the work from home as we get into this a little bit further if we want to remain competitive. So we are having some of those dialogues. I have a client that's got 2,000 locations throughout the country. And, from their perspective, they're looking at it saying, all right, if I can reduce the footprint by 20% of the global portfolio across the country and all these different locations, we can do that by now, short on the new leases, making the spaces smaller and giving more people more flexibility. Now we've accomplished 2 goals. We've saved money and we've made employees happy. So I'm seeing a lot of that. I'm not privy to, I wouldn't be in Wichita Canvas on doing a 3,000 square foot lease unless it was tied to a larger company. I just wouldn't be out there doing it. So I couldn't answer that question.
How about transition from urban to suburban for people that now maybe have the opportunity to do something different? I know here in the Twin Cities, we're seeing that on the residential side of the business, but does that same trend then take place for commercial property?
You're starting to see it. I call it the urban suburban, and where these developers are coming in and they're building within a suburban market, as I was mentioning earlier, 250 residential units, retail, and an office building. That stuff is moving very quickly. It's probably priced 20 to 30% higher than everything else, but it leases up very quick. I've worked on 2 projects in the past 12 months, and one was fully leased before construction was complete, and the other one is 75% leased, and they're both in markets where there's a 25% vacancy rate. So, and I'm not having any arguments over price. People are seeing the beauty of it and the quality of it from a working standpoint. I have seen, and again, this is a short time frame between March and now when you're dealing with big companies, but we are seeing, it's interesting, I've seen a couple of deals floating around where in the past they would not be looking in suburban markets. If you were using Jersey as an example, they were moving out of Manhattan, they would focus on Jersey City, they would focus on Newark, anywhere there's a train hub. For the first time, I'm now starting to see people focus a little bit further west, maybe going toward Morristown, Parsippany. And I think their mindset is people are not going to want to get back on the subways quickly at all. And even in Jersey City, in these newer urban markets where they have to take a path, they're not going to want to do it. So if people are moving more toward an urban direction, I think they're reading those trends, and I haven't seen any big moves happen yet, but I've seen surveys, people coming into the market with real estate directors looking at different opportunities in more urban markets. But they're still focused on the amenities within that complex.
Sure.
It's more critical when you're an isolated building, corporate campus that you have to get in the car and drive 5 to 10 minutes before you're going to get somewhere to eat. The campus or the building has to be amenitized for them to even focus on it or look on it.
Perfect. Well, we're running close to the end of the time. We've got 5 minutes left if we need them. But any of our lender members that are on the call that are dealing with real estate issues, have questions for the group, now is the time. And I see that we have one that just came in that says, are landlords creating shared conferencing and huddle rooms that can be shared by tenants so that tenants can have more square footage for office space?
Yes, is that Dell McLennan from Safari?
It is.
It is, all right. Dell is great. Hey, Dell, how are you? So yes, that trend was happening before COVID. And I think it's still part of the discussions as we're trying to figure out what we're going to do with buildings as we renovate them. But we're trying to figure out how do you deal with it with COVID. Just the transition from one group to the next and the cleaning products to clean it out. So the answer is yes, but now they're trying to figure out how are we going to deal with it. The reason the answer is yes and why they were doing it before, especially for smaller to mid-sized companies, if you can take out a 2,000 square foot conference room out of your space because once a month your 50 employees or 40 employees or 30 employees get together and you can have that amenity somewhere within the building as a shared conferencing facility, great, let's do that. If you can have little huddle rooms or breakout rooms where people can plug in their laptop and just kind of get together versus having large big conference rooms which are kind of getting underutilized most of the time, great, let's do that. So I think from a workplace strategy standpoint, they're still looking at it, but now the question becomes, how do you keep it clean? How do you keep it safe? And back in the day, as soon as someone walked out, the next group would run in. How are we going to manage the cleanliness of this? Look, in a year or two from now, I don't think we're going to be having these conversations. I think people have a short-term memory, and this is probably one of the biggest things we've dealt, other than 9/11, which 9/11 was tragic, but from a business standpoint, it was a short blip of time compared to what we're dealing with now, because people got back to work and from a real estate perspective, at least, it didn't change things. This is the first time that I've seen it change just the way people are working and operating. And I think in 2 years, we're going to forget about COVID. For the most part, people are going to be still hugging and high-fiving when they walk in the office. But I do think they're not going to want to get rid of, I'm working from home 2 days a week or 3 days a week. I want the flexibility. I think that's really burnt into our minds.
Yeah, I think people are going to get, the notoriety is going to wear off a little bit for a segment of people. I don't think everybody's going to say, yeah, I need to go back to the office. They'll just sit in with what they're doing. But I agree with you. I think it's going to get old quick.
And to answer, I just looked at what Dell typed in and answer his question. So I think there's going to be a typical ratio used to be 4 people per every 1,000 square feet in an office space. So that would calculate your common area factors, your filing cabinet, your break room, your conference room would be all factored into that calculation. And over the past couple of years, we were pushing that to 5 people per 1,000, 6 people per 1,000 by putting them in smaller cubicles. And a lot of the office buildings, especially the older office buildings, can't handle that. They don't have the parking for that. The HVAC output can't handle it. That's why you're in an office building and sometimes people are complaining they're too hot, they're too cold. The building systems just can't handle it. As you start to spread people out now, I don't think the footprints are going to change. I just think you're going to have less people within a footprint. So, if there were 100,000 square feet, people may say they're going to drop to 50,000. I don't think that's the case. I think you're still going to be in 75, 80,000. There's going to be a slight drop, but everything's going to be spread out more, coming in. 5 years, 10 years down the road from now, all of a sudden architects are going to start bringing people closer together and the cubicles are going to come back in vogue and it's going to change. But for the next couple of years, I think you're going to have people spread out more. So the footprints may go down slightly, but not significantly. It's just the footprint per employee is going to go up.
We're almost done here, but I just wanted to make one more comment. We were talking about New York and thinking about where, like, I used to work down in Soho. And so it was it wasn't a high rise, but a bunch of those smaller office buildings, but super old. I mean, like the old elevator, the Otis, push,
Yeah.
like the button stuck out. And are they all abandoned now? I mean, what is happening? Are they going to be taken? I mean, they don't have new HVAC systems. They're 9-floor walk-ups, that kind of stuff.
So New York's in an interesting transition right now. our New York brokers, we have about 340 New York brokers. And it's a large portion of our New York office is a large portion of the revenue generating throughout the entire country. Is probably the largest percentage. It just shows you the amount of business that comes out of New York. It's the first time in 20 years where ever New York brokers calling me and my team, hey, let's kick ideas around. Let's figure out new ways of picking up business, because it's dead. You can hear crickets. The flip side of that is, and this is just my own personal opinion, people always go back to these urban markets like New York. It's kind of back in the 70s when you went through Manhattan back in the 70s. Anyone who grew up in New York, and it was a complete and utter disaster. It was a mess. The street was a mess, and you drive down Times Square and there's peep shows and just, it was just a mess. It really was. But you look at it where it is now. So New York is very cyclical from that perspective. And what you're going to have is anyone who has a lot of money and staying power is going to start gobbling up real estate in New York right now. And they're going to need about a year to 2 years to get out of this mess. But as they do, New York will come back. And unfortunately, those older buildings like you're talking about with the push button, they're going to spin it as it's really cool. It's, it's in vogue. It's kind of where it is. It's the artsy feel, that Brooklyn-esque feel. And you're going to get, people are going to come back. I think it's going to be a little while, but, I think in 3 years from now, unless this drags on further and something else happens, New York's going to be back in kind of in full swing as to where it was. And
More affordable.
You hope, right? The goal is your hope is more affordable. And what's driving that? When the next generation of kids come out of college, where do they want to go? They don't want to live in the suburbs. We all wanted it to be in more of an urban environment where the action is and the restaurants. So as long as things are back up and running, people will be there.
Okay.
From a rental rate perspective, anyone who's renting space in Manhattan, I think over the next 2 to 3 years is where you're going to see the best value. I don't think it's hit bottom yet. I think it's still got some further down to go. And then it's going to go up. And New York swings are huge. In New Jersey, in a down market, the rent may be 24. In an up market, it's 28. In New York, in a down market, it's 50. In an up market, it's $250 a square foot. So the swings are just tremendous in New York. And that's just because it's been through these cycles over and over and over again. And it always does bounce back.
Yeah, a lot more flat throughout the rest of the nation though. Yeah.
Yes. Correct.
Awesome. Well, thank you.
You're welcome.
Thank you so much, Frank. We really appreciate all of the information. I don't see any additional questions that came in, and we're just a couple of minutes over time. So thank you all for joining us today. Of course, if you have any further questions afterwards, we would gladly get answers for you. I can't believe any of you were too shy to ask questions, but again, if you were, please send them over to us and we will get questions answered for you. And Frank, we really do appreciate your time and all your help. That was really awesome information.
You're welcome. And if any of your members have any questions, they have any issues, if it's not myself, I can get them to the person to assist them. Whatever market they're in, feel free to reach out.
We appreciate that. Thank you so much, Frank.
You're welcome. Thanks, everyone.
Day.
Thank you.
Bye, everyone.